Lots of things happening in the political world applying to real estate. And I want to break a few of those down just to help you understand how it impacts the market and what you can be prepared for. First and foremost, the Trump administration has made it very clear that they want to have some impact on housing affordability and some positive swings in the real estate market. They have obviously pressured the Fed to lower rates. I don't think we're going to get more Fed rate cuts until there's a potential new Fed chair a little later in the year that has to get appointed and then voted, sworn in, and all that. So that's going to take some time. But we've floated the idea of portable mortgages, 50-year mortgages, which I don't think are really going to have much of an impact. We have now come to the place where we're going to regulate out or potentially regulate out large institutional investors from buying single-family homes. That is another focus of an executive order of the Trump administration. Again, probably, truthfully, a small impact in terms of what it will do. The percentage of people that are kind of put out by the institutional investors for, from a buying standpoint, it's not that much. I mean, Tampa's one of the prime markets for it, but it's not a lot. They're not buying like they used to and certainly pushing out as many families as they used to. That would have been a lot more effective during the COVID years or pre-COVID years than it is now in terms of the activity of them buying for rent. The numbers just don't make sense in our market based on taxes and insurances. So that's not much of an impact. I do think we'll see continued Fed rate cuts in the second half of this year. I do think Tampa Bay will have a positive real estate market this year simply from the momentum of the further away from the hurricanes, the potential property tax relief that our state is floating, which I think will move some people here, continued no state income tax, while other states are pushing legislation that is going to push people out, specifically wealthy people. California right now is floating a billionaire tax, basically a 5% revocation of wealth to the state, which is the craziest thing I've ever heard. It is being floated, and it is causing successful tech entrepreneurs en masse to leave. They're losing so much money just by floating this crazy idea, thinking that people that already pay 13% in state income tax are now going to agree to let California take their wealth from the companies they've created. So all kinds of stuff on X about that. But the point of that is that is going to move more people to Florida. Now, the biggest target for that is probably Miami, but there are a lot of people that are going to get attracted to the Tampa Bay area as an alternate when they tour Miami and maybe it's not their vibe and then they come to Tampa. So again, a lot of positive things. But the thing that the Trump administration did recently do that did have a considerable instantaneous impact on mortgage rates that I will tell you is a short-term window was a $200 billion mortgage-backed securities buy from Fannie and Freddie. Now, that instantly cut interest rates almost a quarter of a point in the same day they dropped down pretty heavily. We're seeing rates in the fives now. We're seeing buyers get off the fence. We're seeing sellers sell because they can buy and get something in the fives and sell their house in the threes or the fours and not feel like they're getting hosed. It is going to move the needle on momentum in our market. We're going to see more transactions this year. We're going to see higher prices, not dramatic on the higher prices. I want to make it clear by kind of putting us into a framework, not compared to what we saw during the COVID years where we're in 27 to 30% appreciation. But I could see a year where we might see a 5% increase in our average sale price, maybe to outpace inflation for the first time in a few years. So lots of good things. But the Trump administration, the reason why I want to make it clear that this is short term is because eventually those bonds are going to kind of run out and the money is going to have been spent and then rates will float back up again. So this is a short term window. So if you have been thinking about buying and you don't want to wait until the end of the year, now would be the right time. How long the rates stay where they are now with the MBS buy is hard to say, but it is a short-term window because when that runs out, they'll bump back up again until there's more Fed relief or, qualitative easing, printing money. There are certainly things the government could do to lower rates more outside of just the Fed. But right now, that is a short-term window. So I want to encourage you that if you looked 6 months or a year ago, or you're thinking about, doing something in the relatively near future, you should jump off the fence and do it now, or it's going to cost you more money simply from rates rising until what I suspect would be some relief again late in the year with a new Fed chair. And there's no guarantee of that. Certainly, I believe the Trump administration wants that to happen, but there's certainly no guarantee that happens. So those are all things that are happening in the real estate market that are moving it both politically and then locally. So again, you're listening to the Duncan Duo Real Estate Show. Andrew Duncan at the Duncan Duo, Twitter, Instagram, YouTube, TikTok. I saw an article this week that the National Association of Realtors is calling for federal incentives to spur investor sales. And of course, one of the obstacles, you've got NAR pushing this, and then you've got the president kind of against it. I'm definitely a free market person. I don't love a lot of the overreach into the market, except for when, maybe it's like the Fed, for example. I don't love how they've determined to control interest rates in a free market compared to everyone else in the world. At the same time, I feel like there's just a lot of overreach into let's do this, let's do that. And I think most of those things don't end very well. You need to let the market shake itself out, and too much influence one way or the other can have dire consequences in the long term. So I want to preface this by saying that I'm very pro real estate, and I'm optimistic, and I love the movement from NAR and from the administration to help kind of, recover our real estate market in a bit. I think some of that is in response to a lot of people's belief that the Fed has not been aggressive enough in cutting rates, and some of these artificial steps to try and stoke the real estate market might have already been taken care of had that not happened. But nonetheless, I'm very much a free market guy. So when I see these things happening, it does cause me concerns. We've gone down these paths before. So the good news, though, a positive real estate market in 26 is already underway in Tampa. Already seeing record visits on my website. We had December's our best month of the year. January is going to be on pace with December, which is super rare. January, February are usually really slow. So a good start to the year. Speaking of good start to the year, if you want to start your year with a waterfront property in Baycrest, man, I've got one of the best waterfront opportunities on the market right now, 4643 Baycrest Drive. This is in Baycrest Park. I lived in this area for a long time, and I really do like this area. This is a 3-bedroom, 3-bath, private pool, waterfront, listed for $825, just short of 1,900 square feet. Beautiful property, waterfront oasis, great vacation opportunity, custom built wine cellar, luxury functionality and fun, waterfront views, inspired 4-panel glass. Just the features go on and on and on. Check out the pictures on our website. Another thing that I really love about the home, you've got a floor plan that's kind of good for entertaining, but also good for, formal rooms. 200 plus square foot dock, complete with a 6,000 pound boat lift, and a 462 square foot bonus space, perfect for a game room, gym, or additional suite. This area in general, I lived there for several years, and the thing I liked about it was that it was waterfront. It didn't seem to have as many obstacles with storms, just based on how the canals are set up. I also liked the commute wasn't too bad. I could get in and out of downtown Tampa while not being in downtown Tampa. I didn't feel as congested as South Tampa. And that area in general, when I lived there, one of the drawbacks was that it didn't have as many restaurants. It didn't have as much commercial development, and that has massively changed. Definitely a great house, a wonderful waterfront opportunity. And again, that address is 4643 Baycrest Drive, listed at $825. You can get more information. You can Google the address. You can see our YouTube video. You can go to our website at theduncanduo.com and look at our featured properties. But a great opportunity on the market right now. And speaking of waterfront and luxury homes on the market, that is one of the places in our market that I am very bullish about. And I think as we start this year, so far this year, we had a $7 million closing. We've got multiple multi-million-dollar offers out there. We've got, homes above $1 million coming on the market. The reason why I think there's so much momentum in our high-end market this year is some of it is pent up. That market got smoked from the hurricanes. It zapped a lot of demand for last year because so many of those homes were damaged, and it took a while to rebuild them. Some of the infrastructure was damaged, some of the areas around some of the waterfront, and then there was a fear factor of people deciding and thinking about moving somewhere else. People have a short attention span. That hurricane stuck around for a little bit, but now it's kind of off the radar, that hurricane season that we had that was bad. So now you've had a year and a half since. You've got a new segment of buyers that are looking. That hurricane stories a year and a half in the past, people aren't paying attention to it. So I think that has a really positive impact on our high-end market, because that was a lot of the real estate that was affected by Helene and Milton in 2024. So another reason our luxury real estate market is going to continue doing well, you have these polarizing political plays in states like California and New York. I mentioned the billionaire tax and the 13.3% state income tax in California. That is moving wealthy people away from California. And there's plenty of those people because of the way California is set up. It's very spread out in Southern California and even in Northern California. And there's a lot of people that go to Miami and they don't like how congested it is, or they don't like how they just don't like the setup. So I think Tampa is going to benefit a lot from those wealthy people from California. And then, of course, in New York and in the Northeast, you've got a mayor in New York that is very polarizing and very socialist in nature. And it is causing plenty of New Yorkers to say, I don't know if I want to keep living here and get taxed to death. I don't know if I love these new policies. And even before they give him a chance to see if these things work, there's plenty of them that just naturally want to leave. So I think you're going to see an exodus of that. But those states are also going to gain in population. I think there's going to be people that want to move and live in that, but probably I think an algorithm of wealth probably alternating. If you think about the stock market, how major hedge funds or large banks will alternate or rotate out of certain asset classes depending on the time of year, depending on how that market's doing. I think you're going to see the same thing. I don't think those areas are going to stop being desirable for people to live in. I just think you're going to see a rotation out of the people and the income that live there. I think you're going to see people that are wealthy that don't want to be taxed moving out of those areas and moving to areas like Florida where we don't have that state income tax and where we potentially have an abolishment of a homestead property tax. And that is certainly on the agenda and something I'm paying attention to. So